market, an automated platform for writing, holding, trading, clearing, custody, and settlement of derivative contracts. The platform ensures a maximum transparency in the entire end-to-end process, with transaction records at every step, and also provides collateral management and margin management facilities for risk management purposes. This market is fully automated for accessibility, convenience, security, and transparency. Who can participate on the FINSEC derivatives market? Eligible institutional and retail investors, fund managers, pension funds, insurance companies, securities brokers, custodians. Registration is simple and can be done through a broker or the C-Trade platform anytime, anywhere. To create an account on C-Trade, select Register. Enter name, surname, and other personal details. Enter ID number. Confirm. Set your personal identification number. Enter Confirm. You have successfully created a user account. Why derivatives? Facilitates hedging as a risk management tool. Improves overall market liquidity. Enhances price discovery in capital markets. Option contracts. The option contract writing, trading, clearing, and settlement platform was designed with risk management in mind. The platform enables automated contract writing through a broker or through the C-Trade platform and comes complete with an automated option price calculator. The platform provides for deposit of collateral against every option contract written or sold. Investors can buy, sell, or sell option contracts, followed by real-time matching, settlement and delivery contract, and the orders can match in real time and can sell a contract. Upon maturity, a holder can exercise their option contract online. They can also allow the contract to automatically expire. Futures contracts. Futures contracts are listed on the platform by the exchange. Investors will be able to take either long or short positions via the C-Trade platform or through their broker. The FINSEC matching engine will match, settle, and deliver the contracts in real time. The mark-to-market process is automated and updated for every option possible. Margin management is also done in real time, and margin calls are communicated in real time. Maturity and final settlement is also effortlessly handled by the system. The platform provides a theoretical price calculator for transparency. The FINSEC derivatives market has a live market watch screen, securities analysis, and position management capabilities to ensure maximum transparency in the entire end-to-end process with transaction records at every stop. Introducing the FINSEC derivatives market, an automated platform for writing, holding, trading, clearing, custody, and settlement of derivative contracts. The platform ensures a maximum transparency in the entire end-to-end process, with transaction records at every step, and also provides collateral management and margin management facilities for risk management. Fully automated for accessibility, convenience, security, and transparency. Who can participate on the FINSEC derivatives market? Eligible institutional and retail investors, fund managers, pension funds, insurance companies, securities brokers, custodians. Registration is simple and can be done through a broker.
Good afternoon, everyone. Thank you for joining us for our derivative session. We're going ongoing sessions every Friday just to educate the market on our derivatives market. Today, I'm joined by Tatenda Masweza, Victor, and Tinache. Those are our product executives. They'll be taking us through the product and just answering your questions as we go by. And my name is Mukai Kuvea, Head of Corporate Affairs. Before we get started, just a few housekeeping rules. So we won't be taking up any questions via the mic. What we'll be doing is we've got a Q&A. We've got a Q&A section. If you look at your screen, you've got a Q&A section. Please use that Q&A section to just post your questions. So write up the questions that you have posted. Then at the end of the session, we'll then try by all means to answer all your questions. At this time, I'll hand over to Tinashe. We'll just first give you a brief overview of the product, just to give you a better understanding of the product. After Tinashe has taken us through the brief overview of the product, we'll hand over to Victor, who will then take you through to proper trading on C-Trade, how you place orders, how you close orders, and any other issues that you might need to be aware of. Thank you very much for joining us, and enjoy. Tinashe, over to you.
Thank you, Mukai. Allow me to share my screen so that I start. Confirm you can see my screen. Mukai?
Yes, we can see your screen tonight.
Okay, so thank you all for joining. And as we have been doing for the past few weeks, we have been introducing our derivatives market. We have taken you through most of the participants who have been following. We have taken you through how we structured our market, how we came up with the derivatives market. So today, I'm not going to do much on how we structured because we're already operating, but I'll take you through the basic information that we really need to understand going onwards in trading our new products. So our derivatives market basically is a public marketplace, and we are focusing on equities and indices as our underlying securities. So just to say that we are saying our contracts, if we are looking at futures contracts, then we are looking at a contract that gives you an obligation to buy or sell an underlying at a predetermined date and predetermined price. Whereas for an option contract, we are looking at a contract that gives you the right to buy or sell at a predetermined date and time as well. In addition to that, all our contracts are being cash settled at maturity. If they are option contracts, we are saying at the date of expired or maturity date, that's when we are exercising the rights that you'll be holding. If they are options, then you are able to close out during the tenure of your contract. Also, our prices are solely determined by the supply and demand conditions. We are saying all our prices are market determined. However, to encourage our investors who are investing on the platform, and also to give you an indicative price for the option contracts or futures contracts you are taking positions in, our option pricing calculator. So our calculator gives you direct access to automated calculations. So what you only need to do is to input parameters that will be required on the pricing calculator. I'm sure you will be able to see that calculator when we are going to take you through the system. And also to reduce our counterpart risk, we have made sure that all trades are automatically cleared through the clearing house, and our infrastructure is clearly approved and regulated by our regulator SEC. So in overview of our model, we have explained this before as well, and we keep on bringing it back, that we have investors, we have brokers, clearing participants will be custodians, and others will feed into our exchange to provide the whole global clearinghouse, where custodian banks and settlement banks will always come in to provide third-party services that we require. So if you're an institutional investor, or even if you're an investor who wants to go through the broker, you register with your broker. The broker will register as well with your clearing participant. That will be the custodians, because these are the participants who are responsible for safekeeping your collateral if you are trading in options, and also managing your margin accounts if you're trading in futures contracts. So basically, that will be the process flow if you are going through a broker. But we have also provided derivatives on our C-Trade platform, where one can just have access to what's happening on the market directly on the mobile applications. Then to summarize our markets, our options and futures markets that we have recently launched, we are saying FINSEC is providing other options in our capital markets. Where we had spot market, we now have options market and futures markets. Giving an example, we have an investor who is receiving payments in the next 3 months and needs to invest those payments in equities. While we have investor B who is holding equities now and wishes to dispose them in the next 3 months as well. So we have 2 investors. The other one is sure that they will have cash in the next 3 months. And then the other one is holding equities. They wish to dispose in the next 3 months as well. But either of the parties is not sure of how the prices will be moving. They are not certain about the price movement, what will be the market looking like in the next 3 months. So for now, the only option we had was to go on the spot market in the next 3 months. So that was the only option we had. Supply, demand, and price will be unknown to both parties. So you just see it as is on the day. But right now, what we are saying is, let's introduce an options market whereby investor B can write a call option. A call option gives the buyer the right to sell the shares in the future, in the next 3 months that they want to trade the shares. So for investor A to have that right, investor will just pay a premium. A premium is just a small amount, if I can say. I will safely say that gives the whole benefit of leverage in the options market, because you just pay a small premium for you to have the right to buy those shares in the next 3 months. So what you would have done today is to secure price for those shares in the next 3 months. And also what the other investor has done is to secure market for the shares they want to dispose. So at the maturity date, when the time of maturity comes, what only happens is for investor A to compare what is in the spot market against what is in the table. Then the investor will exercise and buy according to the agreed price they agreed today. But if not, then investor A will not exercise, and the only losses will be limited to the premium paid at the day when they entered into the contract. So the other option now is to enter into a futures market. So basically, futures market will give you an obligation, different from options that give you a right, and you decide whether to follow the contract or not when it comes to. But for futures, you're getting an obligation. So both parties will just have an obligation, this one to sell and the other one to buy. But what they have done is to secure shares and market for their shares and the price today. And both, because this is obligation to both parties, both of them have to deposit margins. So what we are saying, margins are just a cushion for your position you're opening to say, I am serious about this position. I am also able and I have capacity to deliver my obligation when it comes due. So what you do is to deposit your initial margin, and that is tracked by the exchange on a daily basis through market to market. And when the other investor chooses to exit the market, they just close out. But basically, if at maturity they are still holding those positions, both have got the obligation to deliver. So basically, that's what we are doing. We are working with options market, giving you a right, and futures market, giving you an obligation. Also, we have introduced, like I've mentioned, that we are looking at equities and indices as our underlying securities. So what we have done is to incorporate the Morgan & Co indices that have been traded by Morgan & Co for some time now. And we have issued futures contracts on those indices. So indices basically is a basket of stocks used to measure performance in terms of stock prices for that particular basket. And we are saying this is an indicative, indicates the performance of that sector, either it's a sector or we can say industrial, we have banking sector, I think insurance as well. So all that will give a benchmark to evaluate performances of how our sectors are performing on the capital market. Also, you can use to forecast future stock price movements and measure market rates of return using indices. But what we are now doing is to offer index futures as an instrument now that give investors exposure to price movements of an underlying index. And market participants can make profits from the movements of a basket of equities without actually trading those individual constituencies. So if you're holding an index future, it doesn't necessarily mean that when the obligation becomes due, you are paying or buying the underlying constituencies. If you're looking at banking sector, it doesn't necessarily mean that CBZ has to be upon delivery when the obligation becomes due. But what we are doing is to track the price movements of that particular basket. So there is no need for you to hold the actual constituencies of that index. And also, index futures give investors the ability to just sell an underlying listed financial instrument at that particular future date that we have agreed in the contract. And all those contracts will be cash settled. So our derivatives, our contracts, the options and futures contracts, they are being listed, like I mentioned, on equities and indices, and our stock futures are listed on Insco Africa Limited. We have Delta, Econet Wireless, and Simbisa Brands, also EcoCash Holdings. The same applies to stock options. And for our index futures, we have Morgan & Co All Share Index, Morgan & Co Consumer Index. We also have Morgan & Co Industrial Index, and we have Morgan & Co Telecoms, Media and Technology. So for us to arrive on those underlying securities, mostly we were looking at underlying securities that are more volatile, and that serves the purpose of hedging, because we are introducing derivatives as hedging tools. So we are looking at stocks that have more price volatility and that are liquid, so that at the end of the day, when we issue contracts on these particular underlying assets, it means that even our future contracts, our option contracts will be liquid and will have traffic on the market, and basically serve the purpose of managing price risk. Just to mention before I close off, we have also managed to make sure that our derivatives platform is the transactional charges are a bit lower compared to the normal equities charges, because basically these contracts, they are deriving value from the underlying security. So even the price of trading in derivatives has to be lower than trading in the actual underlying, because we just need the value of having a derivative on our markets. So we have engaged the SEC, we have engaged minions, we have engaged all the necessary regulators that needed to approve our charges. And as you can see that we have managed to have them reduced to 0.789 for both buying and selling. You'll find that even some of the statutory charges have been removed. So what we are just saying is trading in derivatives is more favorable, and you can spare a few RTGS, a few amounts to just say, let me try out this and see how it goes, because we are still in our pilot phase where we are saying you can just spare, I think, a maximum of 100,000 RTGS if you're an individual investor, and 3 million RTGS if you're a corporate institutional investor. So if you can spare small amounts to just start trading, start seeing how it's flowing, and you have an appreciation of how these contracts are performing. And as we round up everything, every necessary things that we need to wind up in our pilot phase, then we move on to increase even the position limits and the trading limits. But for now, we have limited to 100,000 RTGS for individual investors. I think I will leave this time back to Mukai and also look at the questions that have been posted. Okay, so someone was asking, will this recording be available to listen offline? Yes, we will make it available. And then the other one, I think Bright asked also if we are going to share the PowerPoint. Yes, definitely. We will make it available on our website. And also you can just leave your email address on this chat, on this Q&A sessions before we close the session if you want it direct to your email. And then the other one asked, can we have presentation afterwards? Okay, I think I've answered all this. Thank you, Tadiwa. Desire is asking, does C-Trade offer a service in which it acts as a client broker? So far, I haven't managed to purchase any shares listed on ZSE. You can actually, if you register on C-Trade, you are able to trade to trade or to buy your shares on C-Trade. For those shares that are listed on ZSE, they are made available on our C-Trade platform. What you only do when you're placing an order, you have to select a broker that you're working with. So you have access to all those brokers that we have, and you are able to buy shares on ZSE. And also to mention that FINSEC has got OMZO, so you have all those. You have access to both FINSEC and ZSE shares.
I think that's it.
Okay, I have another question from Neva. I notice your options and futures are currently based on stocks and indices only. Will you be offering options and futures for currencies in the future? Exchange rate risk is one of the major risks we will need to hedge against if you're involved in international trade, whether importing or exporting. And I would like to think there are a lot of companies that would benefit from such in Zimbabwe. Thank you, Neva. I can safely say that for now, since we are introducing a new product and we want to introduce them with the less complex ones so that we all have appreciation of how it's going. So that's why we have focused on equities and indices only for now. But in the future, in the next phases, then we are going to be looking at other underlying securities. We will look at currencies, we will look at interest rates, all that. It will only depend on how the market will have understood the concept and how we will be developing going onwards. But definitely something we are also looking at. Yeah, but thank you for raising that.
Thanks, Naishik. So we'll just take a short break and introduce our CEO, Colin Tapumane. He has a few words to share. Thank you, Colin.
Good afternoon, ladies and gentlemen. Thank you very much for attending today's session. We are very excited about introducing this product, which widens our options in terms of securities market trading. So today's session is largely based on the practical aspects of trading. We are seeing a few questions coming in. We will be attending to them as we go. But we want now to demonstrate to you how you can now play around and familiarize yourself with this concept of futures and options trading. The idea behind this product and how we are launching it is that we want as many people as possible to just become familiar with the concept of utilizing derivatives market for various purposes. Risk management and hedging is one, but also speculating on the price movements is also a legitimate activity in terms of how markets operate, and would also want this to help bring in liquidity into our markets. We are aware of the fact that most people are not familiar with this concept. My advice to you is Yeah, so sorry about the interruption. So what I was just saying is that we are providing you with an opportunity to familiarize yourselves with the derivatives markets, and the familiarization does not require you to first understand every minute detail, theoretical detail about derivatives, but rather to allow you to actually practice as you learn, as we all learn. The whole market is learning about this concept, which is very useful, which is something that is used in many developed markets. So for that reason, we would like to work with you and get you to, without exposing yourselves too much in terms of position limits, to just try this. Now, we have two markets, the spot market, which we are used to, which is the main shares market. So if you attempt to buy underlying shares as you have always done, but you are unable to actually either get the price of your choice or get the availability of the shares, now you have the opportunity to buy or sell forward by switching to the derivatives market and look at contracts that are 3 months from now or 6 months from now. And then settlement now will be on a cash settlement basis. So now you have a choice of whether to go onto the spot market or onto the derivatives market. With that, I'll hand you over to Victor to now just try to take us through how you can actually participate utilizing the C-Trade platforms.
Just before Victor steps in, just a few housekeeping rules for those that came in late. Please keep your questions coming. So we won't take vocal questions. What you'd have to do is just type in your questions using the Q&A section. Then when Victor is done taking you through the walkthrough, we'll go through all your questions and respond to your questions. The shorter questions, we'll respond to them via the Q&A section. The others will respond to them verbally when Victor is done. Thank you very much. Over to you, Victor.
Okay, thank you, Mukai. Afternoon once again. I will take you through how you can use the C-Trade platform, both the mobile app and the web portal, to place your orders, to monitor your positions, everything that you need to know. So the first thing that you need to do is you need to log in on the C-Trade portal. So firstly, I will take you through the web portal. So when you log in on C-Trade portal, you'll be presented with a menu like this one. From the normal C-Trade we used about to, it showed you this section of my cash, but we've added another feature, which is a margin account. So I will explain more about that. For trading derivatives, firstly, we'll be trading futures and options, and later on we'll introduce other derivatives products. So on futures, your market watch is like this one. So here it will show you the type of the future. It's either a stock future or index. It will show you the name of the underlying. The underlying is delta. And then here it will show you the maturity date. So our maturity dates are 3 months contracts and 6 months contracts. So you can see this contract matures on 29 September, and another one for delta, it expires on the 29th of December. Here you can see the price of this contract, and also the percentage change if the price is changed. Here you can see the open interest. Open interest simply means that the total number of contracts that you have matched from the time this contract was written. And then here you can see the contract size. So our contracts are based on 100 shares of the underlying. So one contract is equal to 100 shares. And then here you can see the high, the lows, and the open of that particular contract. And then here you can see the buy button and the sell button. this is basically your market watch. So here you can also see index futures. Here it shows the Morgan & Co. All share index, the price, and everything else remains the same with stock futures. Here you can see your open orders. Your orders. That is you can see the order status of your posted orders. Here you can see the positions. So the main difference with equities is that on derivatives you'll be dealing with a position, but on equities you'll be dealing with a portfolio. Here you can see the status of your closed positions. That's it on the market watch and the design of C-Trade in terms of futures. So I'll take you through on how you can post an order into the market. So first you need to know which contract you want to trade. So for example, I want to trade, I'll give an example of a stock future and an example of an index future. So let's say I want to trade Delta September. I click on buy here. If I want to buy that asset, then I can select the market, FINSEC. Then here I can select the type of the order, and then here I can select the broker. So maybe I can select EFE, and then here I can type in the number of contracts that I want to trade. So maybe one contract. So automatically the system will calculate for me. The system will calculate for me the position value and the initial margin required. So initial margin required is just the money that is required to secure the position that you will be trading. So it is just a percentage of the position value. So these margin required are calculated. For more information, you can visit FINSEC website to know the methodology used to calculate this initial margin required. So the system will automatically calculate that, and then those funds are the ones that are going to be deducted from my account when I trade. So when I place an order, these are the funds that will be deducted from the cash available, this one. So to post the order, you can go ahead and place the order. You click on place order, and then for a sell order, the same applies to what I did on buy. So I will take you through also on index future. The process is the same except the calculation on the price. So our indices will be based on the 100 units of the underlying index. So you will see that the price of the index level will be divided by 100 to calculate the price. Then when my order has been posted, I can be able to see the status of my order. So to see the status of my order, I click on my orders here. Here I can see the contract number. This is for just system reference. The system works on numbers. That is a contract maybe for Delta. This one is contract number 2. And then here you can see the name of the underlying. You can see the type is either a buy or a sell, number of contracts that I have posted, the price, the initial margin that was deducted, or the initial margin for that particular position. Here I can see the date and time. Here I can see the status of my order. The order can either be open, rejected, expired, or matched. So here you can see expired order, rejected. So this expired order, don't confuse it with the maturity of the contract. It's just an expired of the order, where it means that your order did not get a match in the market. So the order will expire according to the time enforcer you have selected. So for a day order, orders will expire at the end of the day when it doesn't find a match. When it finds a match, the order will match. So that's it on recent orders. So in case your order is matched, you'll be able to see it on open positions here. So when the order matches, it becomes a position. So here you can see the contract number, the contract name, the type, either long position or short position, the number of contracts, the margin top up in case you have a margin call. When you have your position like this, in case you want to see your marking to market, maybe the daily performance of your position, to do that, you click on select here. So you will see the daily marking to market of your position from day one up to today. The calculations will be done by the system on how your position has been performing. The position can either gain or lose money. It will also show you the cumulative gain of that position. You can also see the margin balance. In case you're in a margin call, it will show you that you're in a margin call. When you're in a margin call, to top up the position, the margin balance, you can click on top up here, on top up margin account here. Then when you have closed your positions, in case maybe it's end of September, when your positions has matured, you can click on close the positions here to see the status of your positions or how much you have gained from that position. Sorry, I'd left something on the margin account. So when your order matches, the margin account balance here will top up. Sorry for that. And then next, I will move on to stock options. So on options, there are two types of options. There is either a put option, which gives the buyer the right to sell the underlying asset, and then a call option that gives the buyer to buy the underlying asset. So you'll be presented with a market watch like this one. It will show you the name of the underlying, the maturity date, the type of the option, the last traded price, the strike price, the highs, the lows, the open, turnover, buy, sell, and also write. So this is the market watch for your stock options. So let's say I would like to take a position into the market. So first and foremost, I need to check on the market watch if an option with the characteristics that I want is there. So if the option is there, I can click on either buy or sell. If it is not there, I can click on write here. And then I can select on the market, then asset name. So maybe it's Simbisa. And then number of contracts, maybe 1 or 100. Then here I can type in the premium that I want for that option. So we have developed a tool that could help you calculate the price. So let me just show you the option price calculator. Let me show you how you can calculate the price using the price calculator. So the model we used is based on Black-Scholes model that will help you to calculate the premium you can expect. You are not restricted to use this calculator. You can use your own methods, but we just developed this to help you come up with the price for an option that you'd like. So first and foremost, you need to select the option type. So maybe it's a put option I want to write, and then here I can select on the name of the underlying, and then automatically the system will help you to input the current price of that stock on the main market. here you can input the strike price that you want. So strike price basically means the price that you agree today to sell or buy the underlying in the near future. So maybe I can say maybe I want this option to be 300, and then volatility is calculated using our system from the volatility of the stocks. And then here you can put the time to maturity. Maybe it's 30 days that I want to write this option for. And then here you can input your risk-free rate, and then you can calculate the price of your option. So it will show you the price, but you will not be restricted to use this price from the calculator. You can use your own methods. There are some who prefer binomial trees or whatever methods you would want, but we've developed this tool to help you come up with the price. So when you have your price, you can select, you can go on and select the broker. You can type in number of contracts, and then the position value will be automatically calculated, and then you can go ahead and post the order. The same applies for a sell, the same applies for write. So when we have done doing this, you can see the order status from the order that you have posted. So to see that, you go on to my orders here, you click on my orders, and then you can see the name of the contract, the underlying, the type, number of contracts, the price, the value, and also the date, order status, either matched, expired, or the order is still open. That's it on the system. I'm not sure if there are any questions. Okay, let me take you through the mobile app. Allow me a moment to log on to the mobile app. So let me take you through the mobile app. Sorry for that. So what you need to do is you need to download C-Trade from Play Store. When you've downloaded C-Trade, you'll be able to access everything from this app. So when you have logged in, you'll be presented with a window like this one. So here you can see futures, options, equities, ETFs, unit trust, and indices. So I would start off by taking you through the futures market watch from a mobile app. So first you see from your left that there is the name of the underlying, type of the underlying, the contract size, the last traded price, the maturity date, and also the price of the contract. So let's say you want to trade Delta like I did from the web portal. You click on Delta future, 29 September. And then when you have clicked it, you'll be presented with with the market analysis, that is the graph, technical analysis, order book, and also historical data for the contract. So to post an order, either a buy or sell, you can click on buy here. And then all the information will be populated for you. So you will need to select a broker. And then you can type in a number of contracts, maybe one contract, and then automatically the initial margin required will be calculated for you. And then you'll be able to post your order. So to post the order, you just click on post order. And then when your order has been posted, it will go to the market to find a match like you do on equities. And then to see your order status, you click on my orders here. And then the screen will populate for you all the orders that you could have posted into the market, and then you'll be able to see the order types from the market. And then when you are done, when your order is matched, obviously the cash would be transferred to your margin account. So your margin balance should be able to increase. And then from there, you can also see your open positions. So to see open positions, this is like basically the performance of your contracts that you could have bought or sold. So to see that, you click on open positions here. And then if you have any open positions, they will populate automatically for you. And then I'll move on to options, like I did on web portal. So to trade on options, you click on options tab here, and then it will show you all the options that you could trade. So you could see the name of the underlying, the best bid, the best ask, also the price and the maturity date. So in case you want to buy or sell or write that contract, you click on the name of the contract here. Then you can click on buy. And then here you can select the broker. The maturity date will be populated for you. And then you can type in the number of contracts that you would like to buy. And then the value will be automatically calculated for you. And then you can post the order. So your order can also be one contract. You can post one contract. It's okay. Like I said before, our contracts are standardized. One contract is equal to 200 units of the underlying. So you'll be able to see that. In case you want to write your own option, that is, if the option is not available in the market, you want to write an option with your own characteristics like the strike price, the premium, the maturity date. So you can do that by typing in number of contracts. You can enter in your premium, the strike price. You can input your strike price. You can select the broker, and then here you can select the settlement date. Please note that all our options will expire on the last Thursday of every month. So you need to select the last Thursday of of a month that would like your option to mature. So to do that, you just click on settlement date here, and then you can select the last Thursday of the month, and then you can press OK, and then you can post the order. And then as a tool to help you, like I did on the web, there's an option price calculator. So to use that tool, you click on calculator here. You input, you select the option type. You can select the name of the underlying that you would like to trade, and automatically the prices will be popped up, and then volatility will also be calculated. Then you can input the strike price, but you are not restricted to use these prices, but you can also change the volatility, the price, depending on how you would have calculated it. So the strike price, I can set it maybe at 90, and then maturity date, I can say maybe 30 days, and then risk-free rate, I can say maybe 60%. And then you can calculate the price. And then when you are done with that, once your order has been posted, it is matched, you should be able to see it under open positions here. You could see the performance of your posted contracts here. Your closed positions, you could also see them here. And then in case you have pledged some shares, you can also see the collateral here and under collateral holdings. I think that's it on options. I don't know if I've left anything.
Victor. Thank you very much, Victor. So now we'll attempt to respond to some of the questions that were coming through during the session, and my colleagues will assist me in responding to the questions. So the first question reads, is anyone able to track contract positions posted by other traders on the C-Trade platform to enhance the time taken to match orders? I'll let one of my colleagues respond to that question.
Okay, okay, thank you. You'll be able to see only the positions that you could have posted, but there's a market depth feature that you could use. Let me try to beam to you on how you can use that.
So for the sake of time, we might not go through that. Let us try and respond to all the other questions that are still there, because we have a number of questions to go through. The next question is, are clubs able to trade in futures and stock options yet? One of my colleagues will respond to that.
Yeah, so clubs and futures and stocks are not yet available for clubs. So you can only trade them on an individual basis.
Thanks, Tatenda. For those that are asking for the recording, we'll put the recording on our website, and we'll also have it on our YouTube channel. So feel free to visit those, and you'll find a recording of the website. Sorry, a recording of the webinar. Then for those that have asked for the PowerPoint presentation, we'll also take down your email addresses, and we'll send those that have requested the PowerPoint presentation. The next question is a margin top-up any different from depositing more money into the account in the case when I have a loss accumulation, which is eating into my margin? One of my colleagues will respond to that question.
Okay, in case you have a margin call, like I said, it will show you that you have a margin call. It will show you the balance of the margin call. So to top up your margin account, you just click on top up. So the funds will be calculated automatically for you, and then the cash will move from your cash account to the margin account. Thank you.
Thanks for that response, Victor. The other question is, in view of the price volatility on the ZSC, it looks like 3 months is very long. Could you consider lesser periods, considering that one can only exercise on the maturity of the contract? In addition, how are these contracts affected by the recently introduced holding periods for shares, i.e. CGT for less than 9 months, etc.? I'll hand over to one of my colleagues to respond to that question.
Okay, so maybe I will answer the first part first. So this is in your view of price volatility on the ZSC. It looks like 3 months is very long. Could you consider lesser periods, considering that one can only exercise on the maturity of the contract? Yes, this is obviously true, but I mean, 3 months only applies to futures. So if you are trading your normal options, obviously this 3 months limit won't apply. And in any case, it also applies when the contract is during the first days of the contract. Now, as that contract, for example, in the futures market, as it moves towards maturity, you might be able to trade it with a lesser time to maturity, given that you might not be interested in trading longer dated contracts. So that will be my short answer to it, but we'll also continuously just look at the market, and when the fundamentals are right, maybe we'll consider listing even shorter dated contracts for futures. But for now, that's the option that you have.
Regarding the CGT, the capital gains tax does not apply to the derivatives market. And also we are doing a cash settlement model. So what will happen is on maturity, it's more of a contract for difference. So on the derivatives market itself, on the futures and option contracts, CGT does not apply. While still at that, I also would like to point out something to the audience. The cost of trading derivatives contracts is much less than the cost of trading on the main market. So you'll find that on the one side, on the buy side, the total cost is 0.38% compared to probably 5% or so on the main market. Then again, on the sell side, it's also 0.38%. So when you are not able to buy, especially if you are planning to take short-term positions on the stock market, you save money by actually playing on the derivatives market, because you then enter into a futures contract and you exit that futures contract without incurring the cost that you would have incurred on the spot market. So it is just something for you to bear in mind, and the difference in the cost is quite huge. Probably when you now want to exercise and get the underlying, but we also don't have physical settlement, which means for speculative trading purposes, you are actually able to make a little bit more of a return by trading on the derivatives market. On top of that, you realize that if you go on to the derivatives market, you are doing almost more or less the same thing that you'll be doing on the spot market, but you are actually predicting a price for the future in 3 months' time, and you are playing around your prediction of prices.
Thank you very much to both of you. We'll move on to the next question, which is, what is the rationale of trading through a broker? I'll repeat the question again. What is the rationale of trading through a broker?
So brokers play the role of providing additional advice in terms of their expertise in analyzing the market. So brokers traditionally are the agents that used to place orders on your behalf. But their role went just beyond orders, but also doing research, analysis, and advising you and giving you tips. Now, you have a choice between going to the broker if one wants similar advice, so that when they post orders, they are doing it based on additional advice. And you have the option of posting directly if you don't feel you need the advice. So it's just one of the channels, but no longer the only channel.
Thank you very much, Colin. The next question is, all banks are now integrated with all banks. I think the question was meant to read, are all banks integrated within your platform? I had a challenge the last time and ended up giving up. It would be nice if I can buy back stocks through a direct transaction from my bank.
This is work in progress. So we are at a very advanced stage of integrating to the national switch. which will enable all banks now to be available for funding. So let's just be a little patient. We are in the final phase of testing those integrations, and we will be able to deliver the good news. In the meantime, one can still do it the rudimentary way by facilitating transfers into their C-Trade account through RTGS, through Pay Now, through EcoCash. You can go on to onto our platform. You can choose Pay Now as the option to do the payment.
Thank you very much. The next section is towards the expiry of the contract. Do you get some sort of reminder, either via email or on the portal? My colleague Victor will respond to that question.
Okay, thank you. So towards the maturity, what will actually happen on the day of maturity? You'll be able to get your funds into the C-Trade account. That is either the accumulated gains or the accumulated losses are from your contract. Okay. For now, we do not have a notification, but it's an awesome feature that we can add on to the platform. Thank you for that.
Thank you very much, Victor. Would like to thank you all for attending today's session. For those who are not on C-Trade, I hope you do. For those not on C-Trade, I hope you do download the C-Trade app and make use of it. And feel free to reach out to us whether via email or via the phone, and we'll be in touch with you. I'll hand over to our CEO, Colin Tavumane, just to close for us.
It remains for me to thank you all for the time that we have spared to attend to this. We intend to be doing this every Friday. We will try to change the content or to make it a bit more interesting. So by all means, try to always attend. Also, we encourage you to try the product and share with us your feedback and experience. We have been granted approval to run this as a 6-month pilot. In that pilot, we will be getting feedback that will actually fine-tuning of the product so that it actually serves your interest and you benefit a lot from it. The derivatives market closes at 4 p.m. every day. So even today, you still have about 40 minutes to play around on your C-Trade platform and do share with us your feedback. So once again, thank you very much.
trading. Introducing the FINSEC derivatives market, an automated platform for writing, holding, trading, clearing, custody, and settlement of derivative contracts. The platform ensures a maximum transparency in the entire end-to-end process, with transaction records at every step, and also provides collateral management and margin management facilities for risk management purposes. This market is fully automated for accessibility, convenience, security, and transparency. Who can participate on the FINSEC derivatives market? Eligible institutional and retail investors, fund managers, pension funds, insurance companies, securities brokers, custodians. Registration is simple and can be done through a broker or the C-Trade platform anytime, anywhere. To create an account on C-Trade, select Register. Enter name, surname, and other personal details. Enter ID number. Confirm. Set your personal identification number. Enter Confirm. You have successfully created a user account. Why derivatives? Facilitates hedging as a risk management tool, improves overall market liquidity, enhances price discovery in capital markets. Option contracts. The option contract writing, trading, clearing, and settlement platform was designed with risk management in mind. The platform enables automated contract writing through a broker or through the C-Trade platform and comes complete with an automated option price calculator. The platform provides for deposit of collateral against every option contract written or sold. Investors can buy, sell, or sell option contracts, followed by real-time matching, settlement and delivery contract, and the orders can match in real time and can sell a contract. Upon maturity, a holder can exercise their option contract online. They can also allow the contract to automatically expire. Futures contracts. Futures contracts are listed on the platform by the exchange. Investors will be able to take either long or short positions via the C-Trade platform or through their broker. The FINSEC matching engine will match, settle, and deliver the contracts in real time. The mark-to-market process is automated and updated for every option possible. Margin management is also done in real time, and margin calls are communicated in real time. Maturity and final settlement is also effortlessly handled by the system. The platform provides a theoretical price calculator for transparency. The FINSEC derivatives market has a live market watch screen, securities analysis, and position management capabilities to ensure maximum transparency in the entire end-to-end process with transaction records at every stop.